Hello everybody, welcome to TraderMerlin Show. It is your, I think it's, what day are we on today? It's Tuesday. Hope we had a good one out there. Man, I was so much fun this morning with the pattern formations, or actually last night with the pattern formations. I thought I would just do a show on that since I didn't get many questions from the viewers last night. That's all right. We'll make a show up anyway and talk about these markets and obviously what Jerome Powell was talking about at our FOMC testimony today. So I guess for the first part of this, I know it's probably the regulars that are here with us today. If you are new, hit that subscribe button, and also you can email me anytime at TraderMerlin@gmail.com. Let me know what you're thinking, stuff you'd like us to check out. So, hello, good to see the regular crew. We've got Glenn, Eric, Big Eb, Jeff, Dana. We've got Ivan as well. Thomasina, good to see you from Arkansas. Wasn't there a football game last night? No, it was Alabama. Arkansas, Alabama. It's in the same. It's on the Gulf there. It's actually beautiful countries. I drove through that one. It's awesome. All right, let me go into the topic du jour, which is going to be this: trading the hammer time bounce. Now, unfortunately, I just didn't get a chance to get to it yesterday. We were talking about so much stuff on the show with Jeff Manson, which I truly enjoyed talking with Jeff yesterday. But every day when the market closes, I like to really quickly run through and just, for my eyeballs, see what I see, right? I don't have time to sit in front of the computers all day long. Some of you may have that ability, which is awesome. Actually, let me take that back. It's not awesome. If you have the ability to sit in front of your computers all day long, you're probably going to go insane. How do I know that? Because I did that for a long time. I sat in front of those markets from opening bell to closing bell, glued, didn't leave at all, and honestly, I think it created some mental issues with me. So you have to find ways to get away from it, which I guess is perfect for today's discussion about hammer formations. Because as I gleaned these markets before the show yesterday, and actually went back through after the market to place some orders, or after our show to place some orders, there were a few chart patterns I just went, man, this looks really good for a bounce tomorrow. And luckily, fortunately, I was greeted with some nice upside moves. Now, I didn't do my normal, which is place bracket orders, which is here's an entry, stop loss, and price target, right? I wanted to at least see when the market opened if there was specific things setting up. So I set some alerts, and it alerted me this morning right in the open that one of them that I had on actually triggered and alerted me to it, so I ended up making a trade off it. So before we get into the exact charts and pictures, I want to, for anybody who might be new, and I'm probably guessing that nobody here is new, you're all regulars, but let's just do it anyway. It is really going and looking at how you trade that, right? It's very simple, and I don't think my pen works anymore. I think it's something might have died on me, so unfortunately I don't get to do my my little pen drawings, which was unfortunate because I actually really enjoyed doing that once I finally figured it out. But let me just do it with the regular pen, the old-fashioned way, doing it with my PowerPoint here. And for those who might not be familiar, this is, hey Giselle, good to see you. I would say I'm sad that your client canceled on you, but I'll take you on the show any day. So here's a hammer formation. Basically, you guys know what this means. It means 4 separate pieces, actually 5 separate pieces of information. Since this candle here is green, put a little G on there, right? Since this candle is green, that means it opened here, it closed here. It also had a high. I can put close / H for the high because it closed at the dead high. And then down here we have the low. Love my penmanship, I know. So those are the 4 pieces, and then the 5th piece is ultimately what is the range, right? Which is the difference between the whole candle, right? How much did it move? That's your range. This is not working writing with the mouse. I'll fix that thing after the show today. So those are the 5 pieces we get from this candle formation. So what's interesting for me is once you have it, how do you trade it? And again, this is a hammer formation, but for those who want to know the exact opposite, every rule I'm going to show you is the exact opposite for something like this, which is a shooting star, where you have a small real body on a long topping tail above it, right? I mean, if this was, let's say, a red candle, for example, that means that it opened here. There's your open. It closed at the low since this candle's red, so there's your close. It's also the low, and then you have your high up here, right? And then you get the range from that. So that's easy, right? That's the easy part, is identifying these. And some of the criteria that you might want to look for is when you have different shapes of candle formations. And let me modify this just a little bit because it kind of becomes well, what is a hammer? So, is that a hammer? Well, it still tells me the same basic thing, right? If this is a candle that I would see, it still showed me that this is very bullish, right? Because it closed at a dead high, close up high. But when you have the range really narrow up at the top like this, it's just a much stronger sign, because it means that at some point, you guys all hopefully can understand this one, that at some point, if we opened here, this is our open. Oh gosh, I'm embarrassing myself. There's your open. At some point, this was one gigantic red candle all the way down to this low, right? It's a huge red candle. And for whatever reason, it pushed all the way back up and closed actually at the dead high. So that's incredibly bullish. Now, if that candle looked like this, well, it still moved, right? It still moved down, but not as far, and didn't move as far back up. So it's really just kind of quantifying the energy needed, not only to push this thing that far down in price, but to rally it all the way back up so it closed near the high at that really high price. So those are the main basic criteria for what a hammer formation is. Now, as we look out through the market yesterday, there were quite a few of these, and they don't always have to have just this, a solid clean top. It could look something like this. Right, that would still technically be a hammer formation because it has a long bottoming tail and a small wick or shadow or tail up top. That is still fine. But if you have something like this, that's not a hammer formation anymore, right? It really is about location of this body. If it was down here, okay, great. We've got a shooting star, right? It's not necessarily that this has to be red, right? This could be green or red. It'd be better if this was red. So this would be kind of an ideal looking shooting star right here if it was red like that. So let's go back and put this back to the hammer formation, since that's what we had today. We had a lot of things look like this. So how do we trade it? It's really simple. And again, for me, everything's all about rules. So if I just put a line across the top here, all right, so there's a little line, and let's assume that this is on a daily chart. So I find this candle on any daily chart, preferably this should be at the end of an aggressive downtrend, a strong downtrend. So if I have a market that looks like this, right, it looks like that, and I find the hammer formation, that's not that important. If it's like this, much more exaggerated moves, then I'm feeling much more confident about the next move up. So preferably at the bottom of something that looks like this. If I see a hammer right there, especially if it's going into a demand zone, man, then I'm really, really excited for it and feeling ready for a good trade. So now we've got some of the kind of qualifications out. All I'm doing is setting this line here, and that line is really my alert. It's where I'm saying, okay, if it gets above this one, then I'm feeling comfortable potentially going long. Now here's the trick, at least for me. And again, you can all do this your own way. It can be done any way you want. I'm just explaining my rules just so that you have a foundation to work with till you develop your own style and figure out how you want to build them. So there's one school of thought that says, hey, if this thing breaks the high, jump on it, right? Buy it right away. Well, the risk is that it opens up somewhere up here and then does this, right? It opened up, it gapped up, and then you bought it and it just came crashing back down. That's a problem, right? We haven't really confirmed this candlestick pattern. So I don't buy it when it looks like this. For me to buy this, it has to open up anywhere down below this red line. All right, it can do this. It could go all the way down here. I don't care where it goes. But if it comes back up and then breaks above this red line, that's the buy point. Now that may happen right away. It could happen first thing in the morning like it did today on IWM, right? It could do this, right? Just kind of traverse sideways and then rip up. Either way, I'm just setting rules for myself so I don't chase something. Where can I get that shirt? Oh, this one? This shirt? Oh boy, I tell you, NJ, this was, now you got me off topic. This shirt right here, this Thrive shirt, was one of the best events OTA has ever done, and hopefully we can get back on track after all the unfortunate stuff that has happened and get back on track so we can do those events. Because if anybody here was at Thrive, I don't know, I thought that was just an amazing event. It was great. And for those who know what Thrive is, Online Trading Academy did an event in Las Vegas. It was a multi-day event. We had tons of traders and speakers and presentations just going over options, futures, forex. Wasn't doing crypto back then, but and then just wonderful nightlife and entertainment, just total fun provided by Eyal. He really did an amazing job, so it was cool. Anyway, now I'm going to get back on track. Oh yes, we forgot the Russians spamming X-rated stuff in the chat again. We remove Mahum. There you go. Got it. He's gone. I think I can actually block that person, can I? I guess I can report him. I'll just report him and pornography, accessories, special material. Bye. See you, dude. Okay. So now let's go and I want to just show you what happened on the IWM today, because IWM. Yeah, there is an event tomorrow, Eric. There's a symposium event tomorrow, which should be a lot of fun. That's going to be Jordan Matthews, Todd Davis, myself, Scott McCormick. It should be a lot of fun. A lot of fun. Okay, so let's go and see on just some of the things. And I'll just zoom out here. Notice the NASDAQ. Right, you can see the NASDAQ had a nice level as well. Right, what I'm looking at is this candle from yesterday. So there's what the chart looked like. And I think you guys can all agree that it has a tremendously long bottoming tail. I mean, yesterday the markets were just getting absolutely slaughtered and then came ripping back up and showed a good close, a good finish. So you have that long bottoming tail, small topping tail. So really, if we look at the NQ, you could say the high on the NQ for yesterday was 15,669. Put a line right above 15,669, which is perfect. I got 15,678.50 and use that as a buy point for the next day. Now, the rule for me is it has to open below that red line. You guys can see that it did, and then today you had nice follow through on the NQ. That was the same for a couple of other markets. We had Bitcoin actually has one as well. You can see it doesn't really matter what instrument it is. Notice I mentioned I'm looking for a strong downtrend and then a hammer formation right at the bottom. Well, we had one here on Bitcoin. And if we look out a little bit, you can see that it did come into this lower demand zone, right? This zone should actually be bigger, but it's okay. Right at $40,000 and now bounced off of that one. Now let's see if we get some follow through there and move to the upside. We had the S&P also had a great one yesterday, right? Now, here's a little bit of a difference. You notice I'm looking at the futures market, which showed a monstrous hammer formation. I mean, that's Thor's hammer right there on how big that thing is. Well, the next day we did have the follow through, nice open moves. You're looking at a 30-point swing there just off the hammer break. Perfect. Well, what if we go to SPY? You notice that it's still a hammer formation. It just doesn't look as good, right? That's your same candle right there. Doesn't look as good, but it still is a powerful formation. You could trade it the same way, right? So the one that I was trading was the RTY, and you can see on the RTY we had a decent hammer formation down into the lower demand zone, which is just the yellow box, which has been there forever, right? But when I look at IWM, here's the Russell 2000. So I just set an alert for myself at 215.45 on the Russell, and you can see that if we zoom out here, it's not like this is a fresh zone by any means. But if we look at that IWM, we've had that yellow box drawn for months. Unfortunately, it's on the futures, not this one. You can see that it's just bouncing in that range. And yesterday's activity brought us near the bottom end of the range. So put an alert to alert me at 215.45. Now, this is why I think it's important and why I'm bringing it up for you to wait. Because if I go to IWM and I switch this over to let's say a 5-minute chart, you guys notice that I'll put a vertical line here separating the close of yesterday and the open of today. So right here, this is the close of yesterday. So that vertical line is the last official bar of the trading day, which gave it a closing price of 215.29. So I just said I wanted to break above that. So I put 215.45 as kind of an arbitrary number. Kind of interesting. This morning, you notice what happened. It opened up above that. So instead of if I would have just said buy it, if it trades above 215.45, do a market buy automatically, what would have happened? I would have instantly been executed and right away been in a pretty decent losing position because it just fell right on that open. So this is why I think it's important to have those rules in place, because my rule is it has to be down below that red line and then move up. In this case, it gapped above it. Hope everybody can see that, because to me that's just the foundations for the rules that we abide by. Now what's interesting is we came back up to 215.45 to the exact penny Actually, it came up to, the high was 215.43, and my alert was at 215.45. So once that market opened up, I put an order to buy at 215.45, and then later in the day, at least an hour or so in the market, got filled and ended up selling before the close of the day. Why? More people spamming. Okay, great. Goodbye, dude. And we'll report them for spamming. All right. Okay. So that was just, again, I wanted to show you that just because I think it explains a lot of things. It explains, number one, when you should, if you see that pattern, what are some of the qualifiers to make that pattern good? So if it was just sideways chop and you had a hammer formation, it's not that big of a deal. Could it work? Yes. There's a greater likelihood of a hammer working after you've had one of those, just a puke sell-off where all of a sudden the market's just tank. And you notice we had that. So I'll go back to the dailies here. And if I go to the Russell, the few days before that was pretty brutal, right? We were up at 227, fell all the way down to a low. Let me get that line off because I can't read the low. Fell all the way down to a low about 210. I mean, that's a 7-point drop, pretty significant sell-off. Now, you notice you also had one back here. Right, so let's just go back in time, which I hate doing because it's always like hindsight's 2020. I know, but if you look at that one right there, there's another hammer formation that happened after a pretty pronounced downtrend. You could have done the exact same thing. Could have said, "All right, putting a line above that high." The next day, you actually would have made this trade, right? Because it opened here, it opened on this green bar, it sold off, it came down below 212.99, and then ripped back up. So it's the reason I keep emphasizing this is I have done it so many times where I just buy whatever it opened up as the next day and then run. To me, that's a problem because you could be left as it just comes cratering back down and either stop you out or just take a huge loss on it. So anyway, those were a couple for today. I thought there was a few for today that I had on my radar. Amazon actually was another good one, but I didn't trade Amazon. I only did IWM today. Let's go AMZN. Look at that hammer formation on Amazon. Same thing, right? If you bought the open, yes, in hindsight you would have made money, but when it came back down and then above the line, that's where it would have worked the best. Would have been a great one on Amazon today. I was also looking at consumer staples, which is XLY. Right, there's another one that worked today. IYR real estate was good too. IYR. Now this one, I would keep this on your radar for tomorrow. You guys can see we've got IYR here. Well, I'll have an alert set for tomorrow, and I'll probably do it after the show. And you can see I've got a high price of today's IYR is at 110.66, so I'm going to give it just a little bit above that. So, 110.73 is fine with me. If it opens up somewhere down here and then during the day rips up, cool, right? I'll look to make a trade on IYR here as an intraday momentum trade. And if the momentum is incredibly strong, I may even keep it. But generally when I do this, I just want to be out by the end of the day. All right, I see a whole bunch of questions come in. When trading hammers and shooting stars on a lower time frame, would you take into account trends in higher time frame or just go for it? Great question, Rob. I think it's always critical to take a look at the high time frame because that sets up the context of where the bigger move is going to be, right? If I look at, let me just see if I can go back to my drawing, and I got to fix my drawing board. I apologize, it's not working. But let's say you got a high time frame. We'll go HTF. All right, so there's your high time frame, and the higher time frame looks like this. But then you look at your lower time frame, and it's looking like this. And you see a hammer right here. What's really important to me is saying, well, where are we in the grand scheme of things? Because if I see this part, apologize for my graphics, right, and that's this, okay, great. That may actually help me pinpoint or refine the entry. But what's most important is the higher time frame because it's been just getting slaughtered. It may have found a base. I don't know. It's still trending down, so I'm definitely going counter trend. But that hammer formation may clue me into a little bit of buying pressure coming in, and therefore maybe I can play a little swing trade move that comes back up into this area of supply right here. Maybe. Right, but we have to understand that I'm going against this big counter trend trade here, or I'm going counter that big trend. So I definitely would prefer to start at the higher time frame and work my way down. I always do, even if I'm day trading. I know it sounds silly, but that's what I do. Let's see, hammer time. But since we have a run up 120% since the ES bottom of March 2020, if we had one, what do you think a blow off top would look like? It seems like it would have to be very extra extreme. Yeah, it's a good question, and I'm not really sure on that read. My gut right now tells me we're going to all-time highs again, and it's going to happen, and it'll rip through it aggressively. Why? Because everybody thinks the markets are going down right now. And from everything that I've done in trading, it's like the markets do what people least expect. It's what my mentor told me years ago. It's like I never believed it. It's like, yeah, whatever. I think it's going to do this. Well, if I'm thinking that these markets are going to sell off, as a lot of people are, and we got rate hikes, we've got inflation numbers, we've got tapering, we got yields rising, the yield curve is shifting, might go inverted, long-term rates are rising. It just brings up that, oh crap, this is it. Well, dang it, if I'm not angry about this one, I am. That means it's probably going to go to all-time highs. It seems impossible to go to all-time highs, which is why it will do it. And then you'll get some sensational headlines from all the media and the news saying, oh man, you missed the boat on this one. And then people flip, they jump in, and that's when the rug gets pulled off from underneath you and it rips to the south side. It's unfortunate, but that's the way it is. Now, I have not built my short position. I actually have some QID in one of my accounts, but haven't really built a big put position or been shorting with the futures, just doing a QID as a double leveraged short position for NASDAQ. So I opened up that one a couple days ago, and we'll see how well that one does. But not going aggressive yet at this point, because I do think we're going to end up making all-time highs yet again. It's just nuts the way this market's working. At some point, though, we will all get our day in the sun and be hopefully loading up that short boat, buying as many puts as I can get my hands on, and just going, finally, redemption. All right. Does a body being smaller make a difference? Yes. Mesnog says, does a body being smaller make a difference? It's two things, Mesnog. It's not only the size of it, but the location, right? Ideally, in a situation like this candle that you see here, you'd like to see it green and right at the top. That's the ultimate bullish sign. If it's down here, okay, it's still bullish, but for whatever reason, it put in a top and sellers pushed it down. If the top of it looks like this, it's still bullish, but again, I feel that it's not as bullish as let's say this one here, because it didn't have to move down or up as far. There wasn't as much of a battle. And I think with candlesticks, with price action period, you have to look at it as a battle. It's a battle between two people or two forces, right? Because I don't know who's on the other side of the trade. It could be Patrick, it could be NJ, it could be Rob, it could be Goldman Sachs, it could be BlackRock. I have no clue. It could be a bot, right? I could be trading against a bot. Bottom line is somebody thinks it's going up, somebody thinks it's going down. And that battle is the only thing that really matters. And if we can, read the structure of the battle, then you can get clues as to what the quote-unquote enemy is doing, or the person on the opposite side of your trade is doing, or even your allies, what they're doing. Now, for those who are interested, there's a very good book that a lot of people look at for trading, but I think it's also for business, it's for really anything, even just relationships or dealing with people. Sun Tzu's The Art of War. And you can find copies of that for free all over the place. Let's go see if I can find you one right now. If you go in, just type in, see if I can bring this up. If you go Sun Tzu, Art of War, and I'll just bring it up over here. So actually, I guess I can share that screen. So I just did Sun Tzu, it's TZU. So SUN space TZU, it's called The Art of War. And just type in .pdf. You'll notice that there's a couple different versions here. They're all over the place. There's some that are like desktop versions. There's some that's like a coffee table version. Some are meant to be read. Some have graphics. It's a really good book, at least to understand battle, confrontation. And again, every time I see these price charts in the marketplace, you have to look at this right here and say, this is just a perpetual battle. It's a perpetual battle for, in this case, the price of the holdings of this real estate portfolio. Or in this case here, this is a perpetual battle that will go on forever and ever over the price of silver, the expectations, the utility, all that stuff. Here we're looking at platinum. Everything, it's like the longest war. They just don't end, When I want to look at Ripple, well, here's the war going on for Ripple right now. Here's the one for, I don't know, Render Coin, right? It's always just a battle, and knowing your enemy, and I guess I don't mean that in a negative way. When we talk enemy, it's just knowing who's on the other side of your trade, right? If Dana here says buying or selling, if Dana buys 100 shares of Microsoft and I just sold 100 shares of Microsoft, it doesn't mean that Dana's a bad trader or did the wrong thing. I may have done the wrong thing. Who knows, right? But we all have our opinions about how things work. It's just really, for me, the most important is how your rules are wrapped around it. So if you are wrong, you don't get screwed and blow your account, which happens to a lot of people. NJ said, would you buy the dip? In what? That demands on which one, NJ? Sorry, I'm a little bit behind. Which demand zone? And the answer is yes. I'm actually fine buying the dips right now. Big Abs, you sold all your puts. Hey, good. I'm glad you sold. Well, I'm not that glad you sold your puts. That was part of your plan, your strategy. But I'm glad because you probably made a pretty good chunk of change on that one. So in IYR, what is your entry strategy? Okay. So on IYR, it's the same thing that I did today for the IWM. Right? I have a hammer formation. So tomorrow, if it opens up at 115, 120, 130, 110, 111, I'm not doing anything because it's above this red line. If it opens up somewhere down below this red line and then moves up above, let's say 110.70, 110.70 is kind of a better number. Let me put 110.70. All right, so if it goes up above 110.70, then I will buy it with a market order. And the main reason is, you can see that for the last 2 days, this IYR has had long bottoming tails. The buyers are not letting this thing fall. They're pushing it up, which is, for whatever reason, who cares, right? I don't care why they're doing it as long as they do it. So in this situation, if that momentum does continue through tomorrow, if these buyers finally win, then I'll be looking to go long at 110.70. I'll set my ATR based off the time frame that I'm day trading it on, so it'll probably be a 15-minute. So I'm not going to be a very wide stop loss. So if you look at something like this, we'll go 15-minute, and let's add on. It's gonna add on ATR. I don't think I can add on anymore because I don't pay for it. Oh, it did. All right, perfect. So there's your average true range. If I put this on a 15-minute basis, you can see right now its average true range is about 25 cents. All right, well, I'll probably go higher than that, right? Because that's near the end of the day. Near the end of the day, it's usually the ATRs. They spike right at the end, which is kind of interesting. But you can see this red line at the bottom tells me how much it's moving about every 15 minutes. And its peak was 35. So my stop loss will probably be, 40 cents or something like that to accommodate the full range of the ATR. But as you'll notice, if we zoom out here, it does change depending on the day. Right? There's these ebbs and flows. You can see back here on December 1st, it had an ATR of 60 cents every 15 minutes, whereas right now it's got an ATR of just 23 cents. So it's going to fluctuate, but there you go. That's how I'm going to be playing that one tomorrow. So on IWM, yeah, NJ, I think that if we look at that on the daily basis or a daily time frame, where are we falling? We're falling right into the bottom range of that yellow box, right? I wish it was lower. I wish this hammer formation was touching that 208 mark. That would have been perfect. But yeah, you're buying near the bottom, right? Why not? Picture perfect reversal for bearish candle, 4 bearish candle in a row, and then hammer. Yes, I agree. It could be 4, 5, 6, 10 bearish candles, right? But at some point, the bloodletting has to stop. At some point, it's gonna be okay. It's oversold, and all of a sudden things rip right back up. And of course, we could be looking at different indicators as well. You could add on stochastics or Bollinger Bands or RSI to maybe refine that entry. But I just think when I look at price like this, you realize that there's pain here. All right, this is not a small drop. I mean, for people who have sizable positions, the Russell 2000 fell 7.3% in 5 days. That's pain. Sorry, unless you trade crypto, that's pain. And crypto, that's called the first 10 minutes of the day. If you get in those 7% moves, don't bother with crypto. Look at the crypto list today, guys. Here's your crypto list. Dash down 4.5. You've got a whole slew of them, up 11, 8, 7, 6, 6, 6. So a good bullish day for a lot of crypto, but honestly, it needs it. It's been a pretty big bloodletting there as well. And again, if I saw some hammer formations forming after some of these big sell-offs, I'd be looking to take those trades as well. I didn't see any great hammer formations in the crypto space, unfortunately, because this sell-off was damn good. All right, any other questions on that? Again, for those who might be new, I hope that for most of you that was fairly clear. I try to explain it in a simple manner. For others, if it's too much, if you're new and that was like, what the hell is he talking about? Japanese candlesticks, just email me at TraderMerlin@gmail.com and let me know, and I can maybe do something to help clarify that. But, it's not that it was just a hammer formation, right? It's how the rules wrapped around that. And I don't care what formations you guys use. If you have an ascending triangle or, I don't know, you name any pattern you want, as long as you wrap rules around it, make trades off it, right? Just so those rules are in place that you don't get burned. Price Surfer. Welcome to the show, Price Surfer. Near cap. I gotta look. I don't know what near cap or market cap for near. I don't know that one. And then Rose Hill. Yeah, well, here's the thing. He said, check out Rose. There's no where did we go? Where did I go? No sell off there. So you look at this one here, Rose Hill Acquisition Company. This is probably another SPAC. So I wouldn't touch this with a 10-foot pole. You guys can see what happened. Remember, most SPACs start out at $10, and all of a sudden this thing just died. This thing was trash. I don't know. This is weird. Rose Hill Acquisition Company. It looks like a SPAC, but I don't think it is. It went on too long. SPACs have 2 years to come to market. But anyway, this is something you shouldn't touch anyway. There's just no reason to be bothering with Rose Hill. It hasn't done anything for the past month except go sideways. Merlin has a teacher explain everything. Oh, thank you, Les. Appreciate that. Right, Eric. And there's two things to that. Eric says, great, good stuff, and it works more than it doesn't. And here's the thing that is critical there, that so you have this nice formation. You have something that you can now scan for, that you can look for. And again, I can show you in TradeStation or maybe in some other platforms how to scan for hammer formations. Once you have that identified, then you can look at a hammer because, again, not all hammers are the same. You can look at it and quantify it and say, was it after a big downtrend? Is it coming into an area of demand? And things like that. Okay, thanks, Price. Because I was like, that near chart looked weird. I knew near protocol, smart contract stuff. So once you can quantify it, then you can say, wow, this candle looks great, or meh, whatever, I'll move on to the next one. From there, we can take what Eric just said, which is it works more than it doesn't. Even if it didn't work more than it does, as long as you have those specific rules I just showed you, and then you also map out a 3-to-1 reward to risk ratio, meaning I'll take, in that example I had on IYR, I'm going to be looking for, let's say, a 40-cent stop loss tomorrow. Well, then my target's going to be $1.20. So I have 3-to-1. So I have a formation that already has a positive chance, a higher than 50-50 probability of working. And of course, I'm sure the FTC is going to be like, you can't make those claims. You can read the books on technical analysis by Bukowski. He did the studies there that shows it actually has a higher probability of moving in my favor. So screw you, FTC. You go from there, and then you add on your risk management, which says if I am wrong, even though I have a higher probability of being right, I'm only going to lose 40 cents in that trade. If I'm right, I might make 120 or potentially a lot more if it runs and I trade manage it appropriately. There you go. Cool. Hey, Rob. Wow, thank you. I got pounded. By Rob with some pounds. Thank you. If I ever make it over to the UK, we'll just stockpile the pounds and we'll keep them and we'll go have a pint somewhere. I miss having pints in the UK. Where are you at, Rob? Are you in London proper? Or you're out some other part of it? It's been a while since I've actually been over in London. I miss it. I miss it. It's so rare because here in California, if I was to go on a lunch break from OTA, go have a couple pints of beer at lunch, and people be looking at you funny. In London, you do that, and you pretty much that's just what you do. You just go have pints of beer for lunch. It's great. Rules wrapped around a trade, idea signals. Exactly. Small stops. And again, be careful with that, Eric, because what I don't want you to get in the mindset of is, I have to have a 2-cent stop or a 5-cent stop. Remember, every one of these animals, and they are animals. If you look at, the S&P futures, it has a certain motion or movement that it does every day. If you look at, I just had the British pound. It has a certain cadence to it and how much it moves per day. I mean, we can scroll through and look at Luna. It also has different movements, and they'll develop personalities of their own, and you have to understand what their personalities are, not impose your personality. And this is important because when we teach classes at Online Trading Academy, in the stock class, we used to go live. You're trading the company's money. And in class, we'd set a 7-cent stop loss or a 10-cent stop loss. And the reason for that was simple. We wanted to make sure that you had rules and you stuck to it. Let's be honest, a 10-cent stop loss for almost any security nowadays is just ridiculous, right? You're just asking to be stopped out. It wasn't the point that you got stopped out, it was that you followed rules. And unfortunately, a lot of people would go home from that class and start, they'd have Apple up there and then have a 10-cent stop on Apple, and they'd email me and be like, hey, I'm getting stopped out all the time. I'm like, okay, what are you doing? Like, a 10-cent stop on Apple? It's called the spread. Come on. So again, make sure you understand the nature of the animal, the beast, the futures contract, the crypto, whatever it is that you're trading, so that you don't get caught off guard. I wouldn't look at you funny. I'd join you. Yes, good, Glenn. I would cheers you to that one. Nice. All right. Yes. And that's a tough one for people to understand, Eric, is if you look at, I guess, be introspective and think about yourselves. What has made and defined your personality and your characteristics and who you are, how you act? It's been your family, right? Your mother and father, maybe your brothers and sisters. It's also been the environment that you grew up in, right? So if you were a privileged life, you might be a little bit more snooty. If you're in a hard life, it can be a little more rough and rugged. So we all develop our own personality and characters and how we function. Some people have good personalities, some people have bad personalities. If you look at the price charts of anything, I mean, hell, even the 30-year bond, boom, here's the yields for the 30-year, right? Check out that 10-year. Oh, we're still ripping up. My 250 target's going to probably be hit soon. But you look at copper. This is the sum result of the personality of tens of thousands, if not hundreds of thousands of traders and opinions around the world. And that will formulate price movement. Right? You get these funny little price actions, and if everybody thought the same thing or acted the same, everything would be the same. Fortunately, it's not. Right? Everything is different, and on any given day, it could be different from than it was yesterday, which is why I love it. Love it. All right, so again, thanks, Rob, for that contribution. I do appreciate that. You mentioned you get in with a market order. Do you get out with a market order or limit? Good question, Ron. So I'll get in. I don't always get in with a market order. Sometimes I'll set a limit if I'm not in front of the computer. If I'm in front, market orders. But if I'm away, I got to do limit orders. Now, the other part of this is if as a target, I'll do limit orders. Right? If it reaches the target, just get me out. Limit order there. Stop losses for me personally are always 100% of the time market orders. Never, ever use a limit order on a stop loss because it could jump your limit order. If you don't understand that, just say, could you explain that to me, and I'll show you, because it's critical. You could put a stop loss on something, it gaps past your limit, and then continues to free fall like a rock, and you're just left holding this bag as this thing craters and goes against you. Extremely dangerous. You should get a metal spec. Yeah, okay, I can do that. I had a couple on. One guy, yeah, I'll do a metal show. Why not? It's funny because you don't usually find somebody who specializes in the full spectrum of metals. They're usually like gold and silver, platinum, palladium, or maybe they're rare earth, or it's interesting how that works. But yeah, I'll work on that, Margaret. Let's see. How much company money do they risk? Not much. So again, I think every account that when it was set up like that we don't do it anymore because there's been changes to the broker firm we were using. But I think every account had like $1,000 buying power. So, we would keep everybody small. And again, it's not about making money. It's about, having skin in the game and adhering to rules and just having some emotions. As you guys know, if you buy 100 shares of Amazon in a simulator, your heart doesn't race. You don't feel vested. You'll get up and just walk away and forget about it. But you buy 100 shares of Amazon with your money, real cash, and you're like, glued to that screen, you're sweating, you're nervous, you're freaking out, you're on one screen over here looking at every social media site trying to find all the positive stuff for Amazon because you're long. It's different when you have skin in the game. I think all of you appreciate that. When you finally have real money and it's like, oh boy, we're freaking out now. How aggressive are you with the buy? Do you take a slightly larger position? Yes. In this market, I haven't been. I've really scaled back. I've not calmed down. I'm just not making as aggressive decisions because most of my stuff right now is buys, and I just feel like we're going to top out. So I don't want to be buying a big block or a lot if in fact we start to roll over. Now that'll all change once we start going down. I'll be probably as big as I'll ever be short, but until the market proves me right, I'll just kind of take small little chips away at it. I like to call it the mosquito theory, right? Just get a little bit of blood every time. Get in, get out, get in, get out, get in, get out. Call it a day. Yeah, we'll do the metal show. Active market orders are best for day trades. Yes. And again, there's two things with that. So for those who heard me say, I always use market orders, remember, I am not trading something that's illiquid. So a market order for me here, let me give you an example. Let's see here. Let's go, create a new one. We'll go to FinViz real quick. All right, and let's just do a scanner or screener, and we'll go, I don't know, we'll go by, here you go, right here. So you guys see this AAC, right? Ares Acquisition Corporation. So let me just put AAC on my chart, and I'll explain this as we go. All right, so here's Ares Acquisition. This is probably a SPAC as well, so let's not do a SPAC. That's just a bad example. But let me go to another one that might not be a SPAC. Let's go to a REIT company, AIIC, or AAIC, all right? So here's AAIC. And let's say, I like this one, I'm going to buy some, and it's only $3.60, so I buy 10,000 shares. So it's 36 grand, right? I'm in 10,000. And I'm loving it because, it's got a short little uptrend here. But all of a sudden, let's say I put my stop loss. Remember, I'm in 10,000 shares, and my stop loss is, let's say, right here, right? So hopefully everybody's with me. I bought it at 361. I put my stop loss. Let's do this. So it'll make it 15-cent stop loss. Okay, I have a 15-cent stop loss on 10,000 shares. That means I'm risking $1,500. Let me ask you guys, if my stop loss here is at $3.46 and I have a 10,000 share order, am I going to get filled right away, or what's going to happen to price? You guys tell me. Now, as of this second, you're probably going to say, well, you'll probably get filled at 346. But look at the volume. This thing trades on an average day 60,000 shares. If I switch this over to a 5-minute chart, let's say it's trading during the day and it comes all the way down to my stop loss, there's no way I'm getting filled at 346. I might be filled all the way down into just 320, 325, who knows, right? It's dangerous. So I'll never be trading these securities. How do I know? Because I just look at their volume. If something has an average daily volume of less than 2 million shares, I'm not going to touch it. I need volume. And again, that's just one of my criteria. I'm sure some of you have different numbers. That's fine. But you've got to go into it knowing that there's that risk involved of serious slippage on your price if you are using market orders. So therefore, I'm comfortable using market orders because what am I trading? I'm trading IWM, SPY, QQQ. Those will absorb 10,000 shares worth of liquidity, no problem. PayPal, we talked about that one in the past. PayPal was not looking so good. Obviously today, nice move, but the daily, we have this box. The yellow box is in play. Too bad Tom's not here. I actually saw him over at the Irvine Center. He's taking options 2 with Larry today, so shout out to Tom. But we drew this weeks ago. You guys might remember, we drew this a while back, and someone asked about PayPal, and I said, it's kind of stuck in this range. Until it breaks out, leave it alone. Well, the probability is higher just from a technical perspective that this is going to break down because the downtrend is so aggressive. However, come on, man, this is PayPal. It's not going away. I don't know. I'd be fine trading this either way, long or short, once it gets out of that range. If you're not worried about price direction, then sell some spreads on this thing. Hell, you're almost in the dead center of this range. Do it. Go for it. All right, it's a great spread trade. Let's see. What else do we have? How much do you plan to risk in a single trade? Yep, 0.5% to 2%. Yep, exactly. I agree. It really does. And again, this is where I say do as I say, not as I do, because I'll risk more than 2% on a trade. But I know myself. I know that I can adhere to my discipline, my risk management. I can risk a lot more than that, but the payout's got to be a lot more than that. For people who are new, not quite comfortable, still a little bit nervous about markets, you should stop at 1% of your capital risk on any one trade. So if you have a $100,000 account, well, you get $1,000 risk per trade. I know it doesn't sound like a lot, but you know what? You got to build up your confidence first before you can really start swinging with big position size and make a ton of money. Did something happen to PayPal? I don't know. I don't follow. There's too much news to follow for me to really stay on top of that one. But yeah, It seems stuck right now. There was one more I want to get to real quick just because you guys have asked me about it. Let's look at Rose. You guys asked about Rose. Oh, yeah, looking great. This is funny because most of the crypto market looks real ugly right now. So don't know the Rose platform. Again, there's over 16,000 different platforms to look at in the crypto space. So, but yeah, that looks great. I mean, actually, if this was an equity, I'd be inclined to start shorting it at 45 cents. But crypto's a little bit different than that. All right, what else do I have? I think I just had to show what was, that's earnings. No, I don't think I did anything. All right. If you're interested in finding out why fundamentals of PayPal fell, what news site do you go to? I don't have a specific one. I'll just type in PayPal news and see what are the general headlines. I know this is going to sound terrible, but I actually like Yahoo Finance. And the only reason is I want to know what the sheeple are talking about. All right, what is the mainstream news spewing to the public for them to absorb? So Yahoo is really the first place I go. But, I'll look at MarketWise and MSN Money or whoever is given, and I'll run through multiple articles because sometimes the authors will have a bias towards their opinion about something. 10% loss for the first time on a single trade, you'll sweat bullets. Yeah. Yeah. Yes, sir. Oh, yeah, I remember mine. Oof, boy, I've had some dingers. All right, that's going to do it for today. I had some economic announcements, but of course I did not put them into my platform to show you, so I will bring that up over here. And this is the economic calendar for tomorrow. Earnings-wise, there's really nothing big happening tomorrow. There is, I think, KB Homes. The KB Homes or Toll Brothers reports tomorrow. I don't remember which one, but here's your economic calendar for tomorrow. As you can see on this one, the big news is going to be early in the morning, right? You're going to have CPI numbers come out. That's going to be at 5:30 a.m. Pacific time, so 1 hour before the market's open. Again, this is really the focal point of the Fed. And you've got 2 days in a row. You've got CPI numbers tomorrow, and then on Thursday, you have producer price index numbers. So really important couple announcements in regards to inflation. Notice that they're expecting the CPI numbers to stay the same for core, but expecting a sharp decline in CPI. Remember, CPI includes food and energy. So apparently they're expecting food and energy prices to have dropped significantly. And then you look at the CPI numbers with core, which takes out food and energy. They're expecting it to stay the same. So kind of interesting to see those numbers. We'll see what happens when the numbers come out. You also have crude oil inventories, the 10-year bond auction. The previous one was 1.52%. I think we'll probably be at 1.7 or 1.8, depending on how the numbers roll out tomorrow. But that's pretty big stuff coming out for the U.S., and that's pretty much it. Can you show on spread trading? Yeah, I think I should have Brandon Wendell. I don't. You mean spread trading with options? Yeah. We actually, if you go back to the archives and you type in Corey Lane, actually, there's a show he did last year that was awesome, step by step on spreads trades, on how to set up spread trades with options, not spread trading futures. That's different. I actually have a show with Brandon Wendell, and again, to find those, you can go to TraderMerlin's YouTube page. There's a little search thing inside once you get in my page, and you can search through the videos there. But check out that one. That's actually a really good one that Corey Lane and Brandon Wendell did. Let's see. How about bringing Ryan Watkins? Yeah, sure. Absolutely. Bring it on. Price for how many markets am I trading? Price for I trade stocks, I trade futures, I trade options, I trade forex, I trade right now. Most of my not really trading is crypto. I'm mainly investing in analysis, so I'm doing a ton in crypto. But I do a lot with options, I do equities, futures. So it's all on board. Bottom line is, if I find something that I feel is high probability, I'm going to take that trade and hopefully make some money on it. Yes, Eric, we'll get Ryan back on. Yeah, I like Corey on spreads as well. It's just he's got a very simple approach and just explains it very clearly. So check that one out. And again, if you guys have, John, check that one out. And if you have other questions, email me at TraderMerlin@gmail.com, and we will build out a show for you. Tomorrow, I do not have a guest slated. Thursday, I've got Brandon Wendell, and then next week, we're probably going to have Dr. Woody Johnson on. I'm trying to get John Rowland back on, maybe even David Warner and others. So it should be a good couple weeks for guests on the program. All right, everybody, that's going to do it. Again, if you like the show, thumbs up, share it, do whatever you like. Help get the brand out there, if you will. Not that this is a brand. And if you have questions, send them in at TraderMerlin@gmail.com. Until then, happy trading. I will see you on our Wednesday show. Take care.